Hello, everybody. Stock chart of the day, the 8th, I don't know, so the 9th of April, 2024. So today we're going to look at uranium. I've had a few people ask me about uranium. I haven't really participated in this uranium move. The time to buy uranium was probably 4 years ago. I've always talked about maximum pessimism, the Templeton style of investing. And you can see uranium went from $140 to 20 actually teens, actually no near $20, and then with the late teens, and then 2020 is actually when the stocks bottomed because everything got smashed during that COVID crash, and then I had this big move up. And this is why it's always difficult to trade commodities on long-term fundamentals, because we all know the long-term fundamentals for uranium are very good. China, India, a lot of Asia, even North America now, because of the issues we've had with the Russian invasion of Ukraine, are going to nuclear. The UK is building a bunch of nuclear plants in Wales. So it's happening, but the issue is it's a very long-term thing. And one of these plants takes forever to get built. So this is it's much more difficult to build a nuclear plant than to say build a liquefied natural gas or solar or whatever it may be plant, because of the risk associated with uranium. So you can see there was this huge bubble back in 2003 to 2007, 2006, 2007, where uranium went from $20 a pound, I think $15 a pound, to 130, 140 roughly at the top. And I remember that. I remember gold and silver companies were turning the typical Vancouver fashion. Those guys, I do a lot of stuff with some people in Vancouver, but they always have a way, those Vancouver promoters, of getting the top, just like when they were turning mining companies into .coms in 1999, or into crypto in 2017, or into AI probably today. So, or I've talked about them turning gold and silver companies into lithium companies during the lithium spike. It always happens out in that place. So anyhow, we can see that, and then we can see this move here from 20, here to 100, and there's been this pullback here. So if we get a shorter term chart, I think we're kind of consolidating here right now. But again, being a guy who is a value investor, and also from a technical standpoint, it was tough because there wasn't really much support or resistance given on uranium, because it just kind of ran straight up. But, you probably had some resistance here at around 70, low 70s, this little high here, or maybe here, the 35, 38. So, and you kind of did have this base between about, 38 and 20 roughly. So it already broke above that, and the time to be in uranium was probably, last year. Uranium kind of broke out before everything else. And now we have gold and silver breaking out. Really, someone should, which someone smart would have done, is probably sell the uranium early this year, sorry, and then get into gold and silver when they were still cheap. So this actually shows us too the benefits of buying assets when they're cheap, because uranium was cheap like everything else until about the last 6 months or so. And you've done okay in uranium in the last 6 months, but especially in the last month or two, you've done a lot better in gold and silver. So the main uranium stock is Cameco. You can see here, we'll get a chart of Cameco, and again, Cameco's right near its highs. The valuation on it is not the cheapest, and so I don't really know. And remember, this is when uranium was 100. Now uranium's lower, and Cameco's gone almost back to the high. So I don't really know if Cameco's a great buy here. And I know because I traded Cameco years and years ago, and it went from a few dollars a share, you can see here, to about $40 a share, and then crashed to $10 in the financial crisis, went back to over 30, and then crashed. Like I said, that was the low in 2020 in uranium. So crashed about almost $5 a share here, and now it's back here. So we kind of are back. We just broke those all-time highs. So maybe that's a chance to go higher. But again, we talked about buying in 2023. You could have bought Cameco at 25 and you'd be up almost a double right now. So I just think that was the time to buy it. It doesn't really interest me here. If we kind of look at Denison, that's like a mid-tier type producer. It's kind of the same way. We go look at these things. Denison, was probably a little cheaper. It looks like, because things tend to trickle down from large cap to mid-tier. It looks a little better technically. Like It's got some resistance here, probably at $3, and it could break that, it could maybe go back to, the 2011 high, which is 5, and the all-time high is 1617. But again, like, it's way off its low. You can see Denison bottomed at like 25 cents a share during the COVID crisis and spent, a lot of times between 50 cents and $1. And again, that's kind of the time to buy these things. And you may have to wait years, but look, even if you bought this, I don't know, in 2018 at 60 cents, you'd be up almost 5x on your money in 6 years. There's nothing wrong with, 400% return in 6 years. I think everyone can agree with that. Even if you had bought it in 2015 when it first bottomed, here, you'd be up almost 6x on your money from the bottom here, 50 cents in 2015 in 9 years. Again, there's nothing wrong with being up 500% in 9 years. Compounded, that's nearly 40 to 50% a year. So again, could it go higher? Sure. But again, when we look at, again, that uranium price chart, and we're going to let's go look at the uranium ETF here. Give me a second. That's the URA. And we'll see the same thing. Like, look, again, it kind of, it ran up till January, consolidated, it's come back. And, there's really, it's in a nice uptrend. But again, I don't see any reason to really go out and want to buy this when you've got the precious metals just breaking out right now. And the precious metal stocks are cheap. And you can see this URA is back to where, these, where it was in 2014, 2013. Whereas, many precious metal stocks are sold on 50, it is way off from its highs in 2011, but, it's off quite a bit from its lows here. So could this continue higher? Yes. Do you want to maybe have a small position in uranium? That's fine. Now we do have a small junior called Blue Sky Uranium. This is a report that was just put out, say that this PEA improved their economic resource, etc. I'm not going to get into the details here, but this talks about, the economics of their resource, etc. And the stock is only a 6-cent stock. It does have quite a bit of shares outstanding. They are a sponsored company. Stock charted. They sponsored me years ago. I don't talk about them that much because they haven't had a huge amount of news. But again, you look at this, maybe you could just kind of buy something like this. It's still cheap. It's still not expensive. And you can buy something like this and just kind of put it away. And if their resource works out, you can see here, it's kind of basing between 5-6 cents and about 10 cents. If the resource works out, maybe it goes back to where it was a few years ago in that 30 to 40 cent range. So that's the kind of thing I would be buying. Of course, it'd be just a small amount of money because it's a junior, but that's what I would be buying. Because I just think these other uranium stocks don't look over appealing to me. Yes, I know there's still a long-term uptrend, but I would like to see them come down. Now, I've talked about the potential of a correction at some point in a bear market in stocks, etc. Maybe if the uranium stocks are taken down with the market, you might want to look at it. So I guess that's all that I got to say. Uranium. I know I get a lot of questions about it. I know the long-term fundamentals are good, but look, again, the demand of this stuff is really over the long term. And I remember when uranium started to spike a few years ago because of the Sprott ETF, which held the physical uranium, and they were like, well, there's only so much physical uranium. This market, the thing is going to corner the market. I don't like that as a bullish argument. I want real long-term fundamentals. The Hunt brothers cornered the silver market. How did that go? So I want like the real fundamentals longer term to play out, not just, oh, this ETF is going to gobble up all the uranium. So, and like I said, these stocks just don't look cheap to me. And I just remember when I became bullish on uranium in the early 2000s, it had nothing to do with the green movement because nuclear is a zero, doesn't have any emissions really. And even someone who's kind of a lefty like Oliver Stone has been promoting nuclear. He did that in a documentary he did recently. But I just remember first looking at uranium back here when Cameco was in that like 7.5 to 10 area. And then it went up to here. And then like, the outlook for uranium was still positive longer term. But of course, basically over the next 12 years, Cameco went down 80% in value. So it's like, I don't really like chasing these things up at these levels. And the one issue I do find, and even like I said, I like Blue Sky at these levels. One issue I've always found is that the uranium juniors, there's just something about uranium and lithium where the juniors aren't great companies. Like, not that junior mining has a lot of great companies, but I think in junior mining, you have a much better chance of a company building up a resource, selling it to a senior, or putting the resource into production. And uranium, maybe it has to do with the permitting of it, how much longer term it is to get a mine into production. But whatever, it doesn't really tend to create great juniors, right? Of course, there's not nearly as many as are in gold, the precious metals as well. So that's my thoughts on uranium. Like I said, long term, I am bullish, but I just don't see the need to go out here and chase the stock at these levels. Now, maybe there's, I was on a podcast called In It to Win It. They cover uranium quite in depth. I've seen them talk about smaller cap companies. So maybe follow podcasts like that for some better recommendations. I know my expertise is more in just metals, gold, silver, copper, etc. So I'm going to stick with that. And I just know that whenever one of these other metals, lithium, uranium, whatever, has gotten hot, it's always kind of been a flash in the pan. And if you're in a long-term commodities rise anyhow, gold and silver are going to do well. So that's still my choice, etc. Oh, there's something I'd like to talk about with lithium quickly here before I end. This is not a great story, but a friend of mine, his cousin who lives next door to him here on the island, unfortunately on Saturday, his cousin's house burnt down. And it was because they just went solar a while ago and the solar batteries were full. And there's supposed to be a little switch that turns off the batteries from continuing to, to collect energy. And that switch didn't go on, and the batteries overheated and caught fire and burned the whole house down. And we talked about how toxic, lithium is when it goes to fire. So again, this is just another reason why I like Abound, my little zinc play, because if we can find an economic way and a competitive way to use zinc batteries over lithium batteries, you don't have that problem. You don't have that flammability, etc. And I know, like the locals here on the island, most of them don't have insurance. I'm sure they did not have insurance on their home. And I heard they lost everything, which is that's a really sad thing. So they're really, they're like, this is one of my best friends, cousins. So. And yeah, it's kind of an interesting story. It's a sad story, but it just shows you again why there is long-term, I would say, demand and long-term potential gain for Abound being in these kind of zinc batteries. Okay, so everybody take care. I hope you enjoyed this. We'll have something out tomorrow on Wednesday as well. Might have some interesting news from Inca One. The stock's halted right now, so we'll see what that leads to. And everyone take care. Bye.